Hi everyone, welcome once again to JD's Guidance. Friends, today we are going to see the concept of fundamental analysis. Remember that whenever an investor is investing in securities, he has got the expectation that the share will be performing or the security will be performing as expected. So when we say that we are interested to know the performance of a share or performance of a security, what we are actually referring to. So performance of a security is actually referred to as performance. We are expecting that there is an appreciation in the share price in future. So we would like to know what is the appreciation in the security price or the share price in future, and what is the dividend or the expected dividend that we are likely to receive from this investment. So we are trying to find out the performance of a security, and that is actually relating to future. So we are trying to anticipate the future. Now friends, how as an investor we are able to know the future performance of our investment? Now friends, for that, before investing, the investors do some kind of analysis. There are two common or very popular analysis that investors very frequently do, and these are termed as the technical analysis and fundamental analysis. So they do fundamental analysis and they also do something called technical analysis. So friends, let us understand what is fundamental analysis in this video. Now remember, as an investor, the performance of a security is likely to be affected by several factors, right? Some of the factors are related to the security's historical price movements. How the security has performed historically, we try to develop a trend and then we try to anticipate how this trend is likely to be in future. And that analysis is known as the technical analysis. So what we are doing? We are trying to study the performance of the security price over a past period of time, and based on these analysis we try to predict the future price movement. This is done under technical analysis. Whereas fundamental analysis is something that we are going to discuss in this video. In fundamental analysis, the analysts believe that the security's performance is actually influenced by three broader factors. What are the three broader factors that is actually responsible for impacting the performance of a security is referred to as EIC factors, or we call it EIC framework. Let's understand what is E. E is the economy related factors. I is the industry related factors, and C is the company related factor. So friends, in fundamental analysis, the analyst is actually making a study of three broader aspects. Remember, the first one is economy. Now what do we understand by this? Actually, when we are talking about performance of a security belongs, or security is been floated, or this security belongs to a particular company. This company belongs to an industry. Remember, group of homogeneous companies or firms constitute the industry, and this industry is actually within an economy. So we have to first understand the economic condition of the country in which this particular industry is located, of which the company's share has been floated, or this is the share of that company. Let's understand in an economic analysis what we are actually doing. In an economic analysis, we are trying to find out what is the economic condition that is prevailing. So remember friends, an economy may be having a bullish turn or it may be having a bearish turn. There may be boom, there may be recession, there may be recovery. So we have to identify which phase of the economy the particular country is at present. So remember, when we are talking about economy, we are generally trying to find out what phase of the economic cycle the country is actually now on. For example, we have the boom on the top, whereas we have the depression in the bottom. We have the recession in between boom and depression, and we have the recovery between the depression and boom. So this is the economic cycle. So we would like to know which phase this particular country is actually in, this economy is in. Why? Because this will give us an indication about the performance, that is the future performance of the security. If the country is in boom, we realize that the security is expected to have a rise in the price in the future. Whereas if it is in the recession or recovery, we believe that prices is likely to go high because there is a kind of lacking confidence, right? Whereas when it is a recovery and boom, there is a revival of hope, interest and confidence that results in the rise in the price of the share. So that's why we have to understand at what phase of economic cycle this particular economy is in. We also have to know the different macroeconomic parameters of this particular economy. We have to know how is the inflation level in this country. Okay? So rate of inflation actually impacts the performance, where the investor is likely to take a lot of risk. This because inflation may result into some kind of loss in the expected returns that the investor is actually planning to have. So we have to know what is the rate of inflation in the economy. We also have to know what is its GDP, gross domestic product. We have to know what is the gross national product. We also have to know what is the national income of the country. So these are the things that an analyst generally take into mind before investing in a particular economy. Let's friends understand, this is about the economic, as economic factor is one of the fundamental factors for our analysis. Let's move on to industry. Having understood the economic condition that is prevailing in a country, now it's our turn to know that how is the industry performance. Okay? We have to know what is the type of industry it is. Okay? And we have to know what is the, what is this industry is going through. It may so happen that economy is having a particular phase, but this particular industry may be having some kind of recession. For example, in the mid-20s, we have a kind of depression in our automobile sector, sometimes in the manufacturing sector. So we have to know what is the industry, state of the industry at that point of time. Right? We have to know what is the type of industry. We also have to know whether the industry is dominated by few of the firms or there are a large number of firms having some kind of equal stake. And let me explain you, if this is the industry, there are a number of firms, farm 1, farm 2, farm 3, farm 4. We have to know whether there is a kind of monopoly or there is a kind of competitive market that prevails in that particular industry. Okay, we have to know what is the operating condition, okay, of that particular industry. Friends, knowing the industry is very important because the firm operates in an industry, and what is the current status of the industry that impacts our performance of the particular security. Right, friends? We also have to know the company factors. Having known the industrial factors, we have to know what are the company factors. Now, the thing is that this company is under a particular industry. We have to know what is its past financial records. We have to know its profitability, how much profit earning capacity this particular company has. This profit earning capacity can be expressed in terms of different ratios like our gross profit ratio, the net profit ratio, the operating profit ratio. So there are different types of accounting ratios that we need to consult before investing so as to know the company profile. We also have to know the liquidity condition of the company. Is the firm having good liquidity? Is it so that the company may be facing some kind of cash crunch in the time to come? So these are actually some of the parameters that we are actually looking for. For example, we have to know what is the current asset ratio, we have to know the liquid asset ratio, we have to know the working capital ratio. These are some of the factors which will give us an indication how liquid this company is. We also have to know the turnover ratio. We have to know how much this company is efficient in converting its raw materials into sales, right? So turnover ratios are generally giving us an idea that is the company facing the problem of overstocking. So there could be turnover ratio with respect to stock, there could be turnover ratio with respect to receivables. So likewise we may have stock turnover ratio, we may have debtors turnover ratio, we may have creditors turnover ratio. We may have to find out how much this company is having overstocking or understocking at a particular point of time. How much is our collection period? What is our payment period? These are the things that we are actually getting from turnover ratios. We also have to know the solvency position of the company. Solvency position of the company would tell us whether there is any chance that the company is likely to face some kind of distress which may result in bankruptcy. So there are ratios like debt equity ratio, proprietary ratio, interest coverage ratio, which gives us an idea about the firm's solvency position. So friends, it's very clear that analysis is not very easy, but of course we have to refer to different public documents for knowing what is the economic conditions, what are the industry performance factor, and how is the company's performance based on some of the parameters. So friends, this analysis will give us an idea what is the chance that in future the price will have a rise, or there is a chance there will be a fall. So you can easily relate all these factors to any of this term, whether price rise or price fall. So friends, that's all about fundamental analysis. We'll meet again in the next video with our discussion on technical analysis, also known as chart analysis. So friends, thank you for watching this video. Let's meet again in the next video. Till then, goodbye.